It's Friday, January the 15th. Halfway through the month.
Halfway through the month, and very few times, if ever or never, I get a chance to make you blush. But happy birthday tomorrow.
Tomorrow is my big 6-0.
6-0.
It's a big.
Welcome to the sixes.
Yeah, yay.
It's a good.
Hey, it's better than the alternative.
It's good.
It's rather than having a toe tag on me.
I've been kind of plowing the field ahead of you.
You are. You're. Hopefully, you'll always be 4 years ahead of me.
But anyway, happy birthday tomorrow. But what a week we've had. What a half a month that we've had. Share with our listeners an interesting statistic that we heard this week, and then we'll summarize maybe the top 4 things we're thinking on and what we're doing.
And what that has meant for your portfolio, too,
Correct.
because we made a lot of moves in the first week in January. As the first week in January goes, typically that's what happens in the S&P 500. Last week, the first week in January, the S&P was up 1.8%. That's only happened 20 times since they began keeping score. And in all 20 times when the S&P 500 is up 1.8% or more, the S&P finishes the year up at least 17%.
We're going to say the same thing or add to it as we go. Vaccines are a positive driver. The Federal Reserve is the positive driver. The stimulus is the positive driver. And then you have earnings report, and we're seeing earnings coming in, and they're the positive driver. All 4 of those are saying to us we need to continue to have money in the stock market, and the cash that we have, we're allocating to that. And with that in, what have we done?
Well, we moved it during that first week in January when it became apparent that the Georgia runoffs were going to be both Democratic. And then we saw that the terrible optics of the Capitol breach. Markets just shrugged it off, kept moving forward, and we did too. So we moved cash into some investments on the value side of the spectrum. Value has been out of favor for the better part of a decade. It's now in vogue, and so we added to those positions. We moved a little bit into high yield. And then we'll be making some moves. Today is Friday, so either today or in the first of the week, moving some of our investment-grade bonds into floating bank rates because we're starting to see a little bit of inflation bumping up a little bit, and we want to be ahead of the curve.
Right. We've also added to small caps and mid caps.
That's correct.
And we're considering as a hedge of the volatility that we know will be here this year, but 2021, please hear us. We believe the year will ultimately be higher at the end of the year. The markets will be than they will now. We will have to go through some ups and downs. We're going to add gold or silver or precious metals as a hedge.
Or some commodity
as a hedge.
A group of commodities as a hedge. So it just
3 to 5% position, and we're working on that right now.
Right.
So we've been active. We as you told somebody, we invested in the teeth of real concern. Real concern, and
not COVID, is it?
No, it's not COVID.
Okay, good.
No, I'm kidding.
Right.
I took a test. I had to take a test
right.
this week because of a grandson.
Yeah,
I passed. I'm negative. Thank you. But anyway, for all that, we're positive. We're optimistic, and we're looking for opportunities because we know it is your money.
And your money matters.
And again, happy birthday. Yeah. See you next week.